Hello, podcast listeners. Hope you're enjoying your day as much as I am. I know today was considered to be the Queen's funeral, and I heard at one point there was about 4 billion people who were listening in or watching her funeral services. And the market in particular just really wasn't reporting a whole lot of news. But we did happen to find some things that we will be able to talk about in today's podcast, luckily. But for those of you who are my listeners in England, I still feel sorry for you. And I send my regards to your country. May the Queen rest in peace. With that being said, today we're going to be first talking about Hilton. Your next stay could potentially be at a Hilton, but you might be in space. Hilton partners up with a space company and gets into the future with being able to provide the facilities for Voyager's private space station Starlab. Okay. 10-year Treasury yields are in the news as well as they hit their highest level since 2011, and we'll talk a little bit about that. Bitcoin briefly drops to its lowest level in 3 months as risk assets continue to get crushed. Okay. Egypt has some news for the Suez Canal saying that they're going to increase their fees a little bit, it sounds like. And finally, we're going to end today's podcast by talking about the home builders and lower prices as sentiment falls for the ninth straight month and what that could potentially mean for the market. With that being said, as I always say at the beginning of each podcast, I'm not a professional advisor in any way, shape, or form. And everything I talk about in this podcast is for informational purposes only. You need to do your own research before investing in any stocks, as you're not guaranteed to make money in the stock market. Go talk to your financial advisor as they understand your financial situation a lot better than I would. I'm just a entertainer slash information podcast host, and this podcast is for information and entertainment purposes only. I cannot legally give you financial advice. So, with that being said, let's begin today's podcast. Hilton to design astronaut suits, facilities for Voyager's private space station Starlab. Okay. From CNBC, Paris. Harris Hotel Hilton has signed on a design astronaut facilities for the private space station Starlab, currently under development by Voyager Space Holdings and Lockheed Martin, the companies told CNBC on Monday. In addition to designing the hospitality suites and sleeping arrangement, Hilton will also work with Voyager to examine opportunities for marketing of the space station and astronaut experiences on board. Voyager chairman and CEO Dylan Taylor, speaking with CNBC at the 2022 International Astronautical Congress, said he's excited by the unique perspective that Hilton brings on the project because they're not space people. Quote, it's like looking at it with fresh set of eyes and saying, how do we reimagine this experience? Taylor said, adding that he sees it as a bit of an edge. The partnership marks the first kind of among the private stations in development, although both the space and hospitality sectors have long envisioned the possibilities of hotel and orbit. For decades, discoveries in space have been positively impacting life on Earth, and now Hilton will have an opportunity to use this unique environment to improve the guest experience wherever people travel, Hilton CEO Christopher Nassetta said in a statement. Voyager said its operating company Nanoracks are developing the free-flying Starlab space station in partnership with Lockheed Martin. The companies aim to have the first Starlab operational in low Earth orbit as early as 2027. The space station is one of four being built by U.S. companies with help from NASA contracts as the agency prepares to retire the International Space Station, ISS, in 2030. Under NASA's commercials LEO Destinations program, Nanoracks was awarded the largest individual contract in the program, valued at $160 million to aid in creating Starlab. Taylor said the partnership with Hilton derived from a relationship that began with the cookies in space in early 2020, when astronauts on the ISS baked double tree chocolate chip cookies as the first experiment in baking food in space. Taylor said Voyager sees strong market opportunities for Starlab in science and research services, as well as human space flight. Voyager expects to begin manufacturing for the first Starlab module in the third quarter of 2023. Taylor said its team is about a year to bending metal. The first Starlab will be built to be as flexible as possible, with a design capable of having three modules attached together. The company's larger term goal is to expand the multi Starlabs that are purposely built for different market needs, Taylor said. You know, that'd be fun, actually. And that's what's probably going to get people to be more interested in space, is if you can tell them, like, hey, you can go to your hotel in space. It seems like Hilton's going to be the one who's going to jump on the trend first. And now it makes me wonder if other hotels are going to soon follow. It also makes me wonder too, and this is obviously futuristic thinking, obviously too. If there ever become a time where it's like Hilton on the moon or Marriott on the moon hotel services. I mean, it's still wishful thinking. I mean, you'd have to lug the supplies up there too to obviously build it, but it seems to be that Hilton's trying to be more visionary. We'll keep an eye on this a little bit more, but it's going to be interesting to see if Hilton is actually able to pull this off with Starlabs and Lockheed Martin at the end of the day. But it's still interesting to see how the future is trying to change before our eyes. I mean, good for Hilton for wanting to make the news by saying, like, hey, we are going to be going into space for a space hotel. I mean, I could see people dropping money in that, to be all honest. I mean, especially with young people wanting to be able to post on Instagram or any social media platform to be like, I went to space and then a hotel in space and it was so awesome. It would make camping look like a joke at some point, but I mean, people are going to do what they want to do to get likes at the end of the day. So we need to keep an eye out for that and see if this actually does work out to where hotels are going to be in the space industry soon. Onto the bond market from CNBC, 10-year Treasury yields jumped to 3.51%, the highest level since 2011. Treasury yields climbed on Monday as traders anticipated the Federal Reserve's next moves in the face of persistent high inflation. The benchmark 10-year Treasury yield gained 6 basis points to 3.518%, hitting the highest level since April 2011. And it was last up 2 basis points to 3.465%. The yield on the 2-year Treasury bond rose 8 basis points to trade at 3.942%, trading around levels not seen since 2007. Yields move opposite to prices. 1 basis point is equivalent to 0.01%. And then we'll talk about these treasury yields in a second. This is the Fed's two-day meeting will begin Tuesday with most market participants expecting another 75 basis points hike by the central bank. Some analysts have, however, agreed that the Fed could increase interest rates by a full point or 100 basis points. It comes after inflation rose more than expected in August. The consumer price index increased 0.1% for the month and 8.3% over the past year. Higher than economists expected, the data had led investors to expect the Fed to double down on higher interest rates for longer until prices fall. The 10s2s spread plunge last week was trading at negative 46 BPS on Friday, and it's just a few basis points from setting fresh multi-decade lows, wrote Tom Essay of the Sevens reports. The signal from 10s-2s is clear. The economy is going to slow materially and like contract materially in the coming quarters, and its message, I believe we continue to need to heed. Okay. Now, this is interesting on the chart where they're showing the yields of the treasury yields. Now, obviously, things might have changed since the end of the day on today and at the same time of the recording of this podcast. But if you look at the treasury yields that they're showing here, okay, it says here that the 3-month treasury yield is at 3.377%. The 1-year treasury yield is at 4.073%. The 2-year treasury yield is at 3.941% yield. The 5-year treasury is at 3.676%. The 10-year, I don't know why anyone would do a 10-year at this point, is at 3.479%. And finally, the 30-year, which is a kind of a joke to think about having your money in a bond for 30 years, is 3.504%. A 30-year treasury. I don't know why people would do that, but people do what they want to do. It's kind of crazy to think that these bonds are so high right now, but at the same time, it's not. But I mean, people are going to put their money where they want to at the end of the day. But young people in particular, I don't see young people putting their money in treasury bonds, in all honesty, especially after the news on Bitcoin that happened today. It says Bitcoin briefly drops to its lowest level in 3 months as risk assets continue to get crushed. From CNBC, Bitcoin fell to its lowest level in 3 months on Monday as investors dumped risk assets amid expectations of higher interest rates. The world's largest cryptocurrency dropped as much as 5% to hit an intertrade low at 18,276, its lowest level since June 19th. It was last down 2.9% as 19,166. Bitcoin is down 7.2% this month and on pace for its second straight negative month after plunging 50% in August. Regulatory pressure, rising base rates, and inflation are pressing heavily on riskier asset classes, especially crypto, and are thus forcing liquidations, reducing capital availability for investment, and increasing concerns over undefined regulatory controls, said Sadie Rainey, co-founder and head of operations at Strix uh, Leviathan. These forces may mute the overall crypto complex until the financial system stabilizes and a regulatory framework becomes more clear. Ether also fell a similar 5% to 1,281 apiece Monday, hitting its lowest level since July 15th. It was the last lower at 1.9% at $1,354.86. It's currently down 17% this month, on track to post its worst month since June. Risk assets have been under massive pressure as the Federal Reserve is expected to stick to its aggressive tightening schedule. The central bank is widely expected to approve this week a third consecutive 0.75 percentage point rate increase that would benchmark rates up to a range of 3% to 3.25%. And this is where things get interesting from the CNBC article. Retail buyers have a long-term outlook on Bitcoin, while institutional traders are treating digital assets like tech stocks and adopting a short-term mentality that's contributing to the sell-off we're seeing, said Chris Klein, chief revenue officer and co-founder of Bitcoin IRA. The tightening policy at the Fed is strengthening the dollar and weighing down risk assets overall. Yeah, I don't believe that one bit, but that's just my opinion. I'll get into that in a second. The so-called Whales institution miners or other holders of large amounts of Bitcoin, typically with more than 1,000 Bitcoins in a wallet, have been hedging the macro conditions and selling their coins since June, according to Julio Moreno, senior analysis at blockchain analytics from Crypto Quant. Okay, this is my personal opinion. Okay, and small disclaimer, I do have some crypto and Bitcoin. Okay. If I had a choice right now between having a whole US dollar or a Bitcoin, I'm going to choose the Bitcoin right now. Okay. And the only reason I'm choosing the Bitcoin is I think it's ridiculous that the US government can continue to just print money out of thin air in order to pay for half of the stuff that they're doing. And obviously, you can say Bitcoin's rat poison. You could say Bitcoin is not a true asset. Okay. But we've talked about in past podcasts how like El Salvador is adopting Bitcoin, Central Africa is adopting Bitcoin. Now, granted, I can also see the US government saying, like, oh, Bitcoin's not a legal tender and therefore we do not accept it. And China obviously keeps flopping back and forth on Bitcoin. But the thing is, like I said, it's going to be hard to continue to print Bitcoin. Eventually, the Bitcoins will be mined. We know X amount of Bitcoins are no longer in the system because someone lost it in their wallet, I think it was, or something. But at the end of the day, if I had a choice between owning US dollars or Bitcoin or full Bitcoin, I'd probably choose the Bitcoin. I mean, it's riskier, don't get me wrong. And this is not financial advice, obviously. But I'm also not 100% trusting of the US government and being able to control their printing spree that they're constantly on, especially as long as Joe Biden's president, too. I mean, the economy in general. I mean, we kind of spoke about it recently about how it's just so chaotic the economy is. And it seems like their solution is like, we'll just print more money. Print more money. Yeah, like that's worked well in history. I mean, now they're trying to tighten interest rates as much as possible now because inflation's just running rapid. There's a Bitcoin, I know what I'm getting. There's going to be rapid swings in at least in the cryptocurrency. But if they just keep printing money, how much longer until the US dollar is just becoming worthless at the end of the day? Just the thought. I mean, I have nothing to completely back it up on, but it is something to think about. Last two things we'll talk about in news articles. Egypt's Suez Canal fee hike won't have a massive impact on trade flows, analysis say from CNBC. Egypt announced on Saturday that they will raise transit fees in 2023 for all types of vessels passing through the Suez Canal. According to a statement released by the Suez Canal Authority, transit fees for tankers passing through the canal will rise by 15%. The increase for dry bulk carriers and tourist ships is 10%. The fee hikes will take effect on January 1st of 2023. The increase is inevitable, and the necessity in light of the current global inflation rates, the authority chief Osama said in a statement. He added the decision factor is an impact on increasing energy prices. Over 20,600 vessels transitioned through the Suez Canal in 2021, according to database company Statistica. VA may fuel inflation. Analysis told CBC that while the rise of the Suez dues won't be a massive impact on trade flows, it will fuel ongoing inflation. Oil prices are currently dropping, and so if the canal prices itself out against the competition, which is going around Africa, then the canal authorities would lose out. So the chairman of Mandarin Shipping, Tim Huxley. Global oil prices have had a choppy year, from skyrocketing to more than $130 a barrel after the Russian-Ukraine war broke out, to tempering or around $80 to $90 per barrel in recent weeks. Huxley added that the increased fees will pass on to consumers, while it will turn fuel inflation. The U.S. reported 8.3% year-on-year increase in consumer pricing in August. Rising food and shelter costs offset a decline in gas prices. However, CNBC is still saying it's a cheaper route. Another analysis said that despite the rise in fees, the Suez Canal is still a substantial cheaper route for vessels. The savings of sailing via the Suez Canal are still very large, particularly due to very high oil and bunker prices. In addition, the shipping markets are generally seeing high demand and low vessel availability. This also encourages ship owners to send vessels via the fastest routes, said Niels Rasmussen, chief shipping analysis of Shipping Associates uh, by BIMCO. Rasmussen said that he does not expect ship owners to turn to alternative routes such as sailing south of Africa. Okay. You know, I love how they admit it here. Let's read that quote one more time. Hulex added that increased fees will be passed on to consumers, which will turn fuel inflation. Inflation's not going to be done, it seems like, running anytime soon. Now, granted, these are the pros that we're reading about, and sometimes the pros do get it wrong. But I don't know how that's going to affect us here in the United States. I can see how it can affect Europe in particular. Okay. I mean, they're still they apparently are supposed to have a food shortage in Europe soon because of the whole Ukraine-Russian war. Gas is in demand in Europe, and there's not enough gas right now. So maybe it will affect their consumer prices in Europe. It's hard to tell. Maybe it will affect us here in some way that I'm not currently seeing. It's hard to tell in general. But it's going to be interesting to see how these price increases do affect some parts of the economy in the world. And ships are going to do what they need to do to get to their goods and services as fast as possible. So we just got to keep an eye out to see what's going on overall. And the Suez Canal, last time it was being mentioned, was when pretty much a ship got stuck in it, which caused a lot of chaos, I guess, in the economy last time. Hopefully that doesn't happen again, but it's still something we got to report here on this podcast, because we just want to report as much as we can to see where things are going. Last thing we'll talk about: more home builders lower prices as sentiment falls for ninth straight month. From CNBC, more builders are lowering their prices for homes as their confidence in the market continues to tumble. Home builder sentiment in September fell 3 points to 46 in the National Association of Home Builders Wells Fargo Housing Market Index. Anything below 50 is considered negative. That is the ninth straight month of declines and the lowest levels since May of 2014, with the exception of the short-lived drop at the start of the coronavirus pandemic in 2020. Sentiment was at 83 in January of this year, where interest rates were about half of what they are now. Indeed, builders blame rising rates for their falling sentiment. The average on the 30-year fix started this year around 3% and then began rising steadily, crossing 6% for just a few days in June. According to Mortgage News Daily, it then fell back a bit and then hit 5% in August before rising sharply again, back over 6% this month. That made an already pricing housing market even less affordable. The Federal Reserve, meanwhile, is expected to again raise its benchmark rate this week as inflation remains high. Quote, buyer traffic is weak in many markets as more consumers remain on the sidelines due to high mortgage rates and home prices that are putting a new home purchase out of financial reach for many households, said NAHB Chairman Jerry Conter, a home builder and developer from Savannah, Georgia. Nearly a quarter of home builders also reported lowering home prices, up from 19% in August, Conter added. Of its index, three components: current sales conditions dropped 3 points to 54, sales expected in the 6 months fell 1 point to 46, and buyer traffic declined 1 point to 31. Builders continue to report elevated construction costs, in addition to higher interest rates weighing on their market. Higher costs for land, labor, and materials have made it harder for builders to lower prices, but they are now being forced to. Quote, this soft market, more than half of the builders in our survey reported using incentives to bolster sales, including mortgage rate buydowns, free amenities, and price reductions, said Robert Diaz, chief economist of NAHB. Okay. This is where things, this the housing market here gets interesting at this point. It says on the 3-month average, sentiment in Northeast fell 5 points to 51. It also dropped 5 points to 44 in the Midwest. In the South, it slipped 7 points to 56. In the West, where home prices are highest, sentiment declined 10 points to 41. You know, the housing market, I mean, I don't know much about the housing market. I just report the news as much as I can and just talk about it. But there's memes going around the internet right now that's making fun of my generation. Yes, I am a millennial, and millennials are making memes right now that says millennials waiting for the housing market to crash so they can buy a home. We had read an article a few months ago from CNBC too that said that millennials and I believe Gen Zers were wanting to buy homes. They just couldn't afford it. And maybe if the whole market eventually does crash, these millennials and Gen Zers can buy homes. But at the end of the day, too, it's getting interesting to see how this isn't being talked about, that the housing market is soft. These builders are struggling with cost, labor, materials, and it just seems unreal right now currently across the board. And now there's memes popping up about the housing market, at least from yesterday when I was scrolling through social media for a bit before coming across this article, or not this article in general, just reading articles from the news. It's gonna be interesting to see what happens when if the market does crash. I'm not saying it will, and I mean there are days where I feel like it is going to crash, but it's just really hard to predict this market in general right now. Between the CEOs who are saying or between the CEOs who are pulling their forecasts and the CEOs who are saying who's saying there's going to be a recession, and the layoffs that are happening, something's got to give eventually. What it is though is yet to be determined. So we'll keep reporting on this podcast as much as we can until we can figure this out. So, with that being said, fellow podcast listeners, thank you so much for listening to this podcast. I hope you have enjoyed it. If you had, please like and subscribe to this podcast. Everything we talk about in this podcast can be useful information for those out there, and friends and family might be able to enjoy it as well. If you share with friends or family, we can continue to grow this podcast and keep talking about the news and events that are happening out there in the market that CNBC or Fox Business or even CNN Business isn't willing to talk about all the time. We also ask too that I've been reading some of your guys' comments in the YouTube one. If you haven't heard, we've expanded to YouTube a little bit, and we continue to expand as much as we can. I am reading your comments. I just haven't had the time to go back and look at them. And I would advise to listen or apply to this podcast through Apple iTunes or Spotify, as it takes a little bit longer to upload onto YouTube. And I hope to be able to fix that going forward. So, with that being said, fellow podcast listeners, thank you so much for listening to this podcast today. Thank you and goodbye.